Ever wish your portfolio came with a GPS? One that rebalances, diversifies, and avoids crypto panic? Meet FBAL. Most investors fall into one of two traps: overthinking every move or throwing it all into one index and hoping for the best. FBAL is designed for the middle, aiming for a smoother ride with smart structure. FBAL stands for Fidelity All-in-One Balanced ETF. It's a globally diversified investment product built for Canadians. Think of it as a portfolio in a box. If you're saving for retirement, a home, or just trying to invest without obsessing over stock tickers, FBAL could be your go-to. It launched in 2021 and lives in that sweet spot between hands-on investing and not having time to think about it. You get a balanced mix of stocks and bonds, and yes, even a pinch of crypto. FBAL is built like a modern take on the classic 60-40 portfolio. It blends global stocks for growth with bonds for stability, using a mix of active and rules-based strategies to do it. The part of the portfolio that holds bonds leans toward high-quality bonds that carry less risk without going too conservative. And because the stock side includes rules-based filters known as factors, it's not just about buying the whole market. There's an intentional filter behind what makes it in. That tiny slice of crypto? It's there to add diversification, not drama. FBAL is a fund of funds. That means it holds other funds inside it. Roughly 59% is in stock strategies, another 39% goes into fixed income, and the remaining 2% is in cryptocurrency. Just enough to spark curiosity, not chaos. If you've never heard of rules-based investing, you're actually not alone. Factors use filters to find patterns that tend to repeat over time and picks the stocks that follow those patterns. Like stocks that have been rising recently, momentum. Companies that deliver steady results, quality. Ones that historically hold up better when markets get rocky, low volatility. And companies that are trading at less than what they could be, value. The same idea works in bonds too. Screening for stability, managing risk. Bottom line, FBAL combines active ideas, passive structure, and rules-based filters. There are tons of balanced products out there. What makes this one stand out? First, FBAL is built entirely with Fidelity products. That means you get access to research, a global analyst network, and active management without the traditional fund fees. Second, it blends rules-based and actively managed strategies. The goal is to filter out companies that don't add value. Here's how to think about our investment approach. You're at the market picking apples. You grab a random bag and hope they're all good. Or you can handpick each one and avoid the bruised ones. That's the idea behind the filtering strategy. There's also a tiny sleeve of crypto. It's there on purpose. Crypto doesn't always move like stocks or bonds, so even a little can help with diversification. And if the word crypto makes you nervous, take a breath. You're not managing keys or wallets. Fidelity takes care of that. FBAL invests in a lineup of Fidelity ETFs. Each one has a role, whether it's to bring in quality stocks, actively manage bonds, or just a bit of exposure to digital assets. These ETFs don't just mirror the market. They make intentional choices about what to hold and what to skip. Think of it more like a curated playlist rather than your full music library. You're not shuffling through everything. You're pressing play on the hits. FBAL is for the people who want structure but don't want to manage every trade themselves. It's also great for investors who want one reliable option instead of juggling multiple ETFs. FBAL can offer simplicity without giving up diversification. You still get access to global markets and multiple asset types, but you don't need a spreadsheet or 5 cups of coffee to make it work. You don't pick every holding yourself. That's intentional. This is built to deliver a peace of mind, not control. FBAL is meant to be the core of your portfolio. You can hold it in a TFSA, RRSP, or a non-registered account. It works across different account types, depending on your plan. The idea is long-term capital growth with managed risk. This isn't for short-term trades. It's built to stick around. And yes, it rebalances automatically. If the mix drifts too far, it adjusts. You don't need to do a thing. So what's the point of FBAL? It gives investors a global mix of stocks, bonds, and crypto. It simplifies the process without watering it down. If you want a strategy that handles the moving parts, this might be a potential option. FBAL gives you diversification, active research, and a simple structure. It's a balanced strategy without the complexity. If you want to dig deeper, the fund page is linked below. Thanks for watching.